Hello, my name is Marc. I'm a financial wellness board member with the National Debt Relief. I have over a decade of experience working in the financial services world. It is my goal to make very complex financial concepts that you hear every single day. I want to make them easy so you can transform your financial life. And you might be wondering, why would I want to do that? Well, I spent a lot of my career working as a financial advisor and a stockbroker, but I was up to about $80,000 in debt until I changed my life. And I'm proud to say that I'm 100% debt-free, and I'm now here to help you in that journey of becoming debt-free as well. Before we start the video, let's talk about one big concept real fast. The biggest expense that you'll pay in your life other than taxes will be your housing. That means picking a house to rent or purchase is something you really want to think through before making a decision. Some people make the very conscious choice to rent because it gives them more flexibility and they're not tied to a specific location. Renting means that you could terminate your lease contract and relocate fairly easily. On the other hand, owning a home can be a good choice too. If you wish to settle in one place for a longer period of time and you believe that you could find a good deal, it might be a good choice. It may also be a good way of building wealth, since you're paying off your mortgage and getting more and more equity in your home as time passes. But one thing to keep in mind is that you can get in over your head by renting or purchasing a home that you can't actually afford. And trust me, I've been there before. And that could be a really nasty situation, no matter what deal you find out there in the market. Because if you think about it, not being able to pay your rent or your mortgage and getting charged a large amount of interest charges and or late fees is something you want to avoid at all costs, since this could get you in a lot of debt very fast. Renting or purchasing a home you can actually afford is probably the way to go, potentially saving you a lot of stress and ultimately making living in your home or even home ownership an overall better experience for you in total. You don't need to get into uncontrollable debt because you want to keep up with the Joneses. And again, I've been there before where I said, okay, well, I want to get a bigger home, I want to get a bigger apartment because I want to keep up with all my friends. There are ways to rent or own a home and make it financially sustainable. But you might be asking, how do you go about renting or purchasing a home that you can actually afford? What do you look out for? And are there general rules of thumb to follow when it comes to budgeting for rent or your mortgage payment? And that, my friends, is what I want to go over today. And the answers might surprise you because they're not as clean cut as you might expect, which is why you might want to pay particular attention to this video today. First, let's talk about everything that makes up the price of the home. When you rent, the monthly price is the monthly price, and that's what you pay. Bada boom, bada bing, as simple as that. But when you buy a house and become a home owner, you have to account for taxes and fees. What you need to know is that the listing price is often just a portion of the total cost of the house. As a start, when you buy a home, you probably get a mortgage. But let's be real, not many people are actually using cash in order to buy a house. The monthly payment of the mortgage is made up of not only the principal amount, the amount that you owe, it's also the interest. On top of that mortgage, whenever you own a home, you also have to pay property taxes. And these are often calculated as a percentage of your purchase price of the home. And property taxes have a wide range, and it can range from 0.3% all the way to 2.5%. And that's per year, depending on which state you live in. Now, it might not sound all too much, but if your house is valued at $300,000, this number will range from $900 to $7,500 per year. Be mindful that this tax rate can vary year after year depending on the demand of housing in your area. Third, you have insurance costs. Think of dwelling insurance, personal property coverage, liability coverage, etc. The average annual cost of homeowners insurance is $2,728 as of 2024. And yes, that's a very significant expense. And lastly, and definitely not least, you have home repair costs. Think about getting that new paint job, fixing a leaking roof, upgrading your AC, anything that might go wrong that needs fixing, you have to pay for. Typically, the costs to account for when it comes to home repairs are calculated using the so-called 1% rule, which states that you'll spend about 1% of your total home value on repairs each year. Now let's complete our example with our $300,000 home. Assuming a down payment of $40,000, you're left with a mortgage of $260,000. This mortgage you'll pay back over a period of about 25 years. The principal payment will be about $8,666 per year. At a 2.4% interest, the interest in the first year will be $6,240. And to include all the other costs of owning a home, we have to add in $4,200 for property taxes and $2,728 for insurance policies and $3,000 for repairs. That's a lot more than just paying back the mortgage, right? Now you know the total amount of money you're going to spend on rent or on a mortgage. And as we discussed, when it comes to renting, the price is the price. When it comes to owning a home, there are a few few other costs that you need to account for as well. I say a few, but it adds up to be a pretty high amount. So depending on your total monthly or yearly income, you can set a budget for rent or a mortgage that you can actually afford. When it comes down to renting, calculating your maximum price is pretty straightforward, as the rent is the rent. A general rule of thumb that's often used is the 30% rule, which states that the maximum you should spend is 30% of your gross income on rent. So if you earn $5,000 per month before taxes, your rent payment should not exceed $1,500. Please note, this is a general rule of thumb and one size doesn't fit all. If you happen to live in an affordable area, the percentage of your income that actually goes towards your rent may be much lower than 30%. And in bigger cities, the percentage of income that's spent on rent is often somewhat higher than 30%. So this truly depends on your unique situation. Another rule that's often used is the 50-30-20 rule of budgeting. This means allocating 50% of your take-home pay after taxes to needs, so think housing, transportation, food, 30% on wants like clothing, traveling, eating out, and 20% going to savings, investing, and debt payments. Over the years though, the average percentage that's actually spent on housing, transportation, and food combined is 55%, with housing making up about 33% of your total expenditures on average as of 2023. If we use this percentage with our example of someone who makes $5,000, this person may be able to afford a rent payment of $1,667. When purchasing a home, these rules become a little different, since there are way more expenses to account for when it comes to owning a home versus renting a home. The first rule that's commonly used is the 28% rule. This rule states that you should spend no more than 28% of your gross monthly income on your mortgage payment, including principal, interest, property taxes, and homeowner's insurance, or PITI for short. So it's easy to calculate then what the max amount you should spend on your mortgage payment each month should be. Take your gross monthly income, multiply it by 0.28, and then you have the number. Using this rule, if we go back to our example of the person who's making $5,000 a month, this person should not spend more than $1,400 on housing. In the current market, this can get you a home value of about $300,000, assuming a 20% down payment, a loan term of 30 years, and an interest rate of 4%. You can also check out this calculator on Bankrate's website. If you fill in your house price and loan terms, you will get a monthly mortgage payment. Then you can check if it fits in with the 28% rule and your income. Another rule that you can use here is a 36% rule. Yes, I know there's a lot of numbers and a lot of percentages, but just roll with me here. This rule states that your monthly total debt payment, including your mortgage, should not exceed 36% of your gross monthly income. With our example of someone making $5,000 a month, this amount comes out to about $1,800. This could be a combination of a $1,300 mortgage and a $500 car loan, or a $1,500 mortgage and $300 credit card payment, whatever works for you. If, however, you have a particularly expensive car loan and are paying off one or more credit cards, you might find that the amount that you can comfortably lend in the form of a mortgage is much lower than what you might think. So adhering to this rule helps you to ensure that you're not overextending yourself financially. Now you know how much you can comfortably spend on rent or your mortgage. When it comes down to buying a home, you have to account for making a down payment on your house though. Making a down payment of at least 20% gives you significant equity in your home, which makes the mortgage payment easier to manage, as well as helping you get favorable terms on your mortgage. But you might be asking, how do you save for a down payment on the home? And how do you fit this in with your current spending habits? To help you on your way, on National Debt Relief's website, there's a vast library of free resources that give you a detailed explanation on how to budget and how to save a few dollars per month. You'll find a link to the library on the free resources in the show notes. And check out the other videos on his channel too, as we explain how to save in more detail in other videos. The final thing that I want to review today is what a bank would check for when you're applying for a mortgage. First, if you're applying for a mortgage, the bank will look at a couple different metrics, such as your income, your current debt, and overall financial situation. To get this information, they'll ask you things like, do you have stable employment? What's your current monthly income? And what's your credit score? An important metric that they typically check as well is your debt to income ratio. And you might be asking, oh my God, is that just another percentage? mortgage? Yes, I know, don't get mad at me, but that's another metric that you have to think about. Banks want your debt to income ratio to be below 45%, meaning that your total monthly debt payment should not exceed 45% of your total monthly gross income. Again, if we go back to the example of the person who makes $5,000 a month, this person's maximum debt payment is $2,250. This includes the mortgage payment, the car loans, the credit cards, the student loans, and any other debt that you have. So it's good to take note of all of that before applying for a mortgage. All right, so to recap, how much can you comfortably afford to pay towards your home based off your income? And I know you're thinking there's plenty of hidden expenses to keep in mind if you're buying a home instead of renting. Am I right? I hope that this video helped you in determining how much home you can actually afford, as well as help you in making a choice between renting and owning. Rent is often more flexible, but you're not actively creating wealth as you may be with owning a home. On the other hand, owning a home means that you have to take more responsibility and settle in on one location. But owning a home is a nice way of building wealth for yourself. Both ways of living have both pros and cons, and depending on your unique situation, one is probably better than the other. But at least you have a rough guide on how much you can spend each month on housing, whether it's renting or owning. If, however, buying or renting a new home is currently not a priority for you because you have a significant amount of debt and you're actively looking for help in your journey of becoming debt-free, debt relief companies like National Debt Relief are here to help. If you have any questions or would like a free, no obligation debt relief consultation call, visit their website at nationaldebtrelief.com. Also, if you have any other questions regarding any other financial related topic, check out the other videos in this series on National Debt Relief's YouTube channel. It's our goal to make very complex financial concepts that you hear every single day. We want to make them easy so you can transform your financial life. Thanks for watching. We'll see you in the next video.